All right, man. Well, thank you for joining us today. I appreciate it very much so. David Choi, tell me about yourself. What do you got going on? Who are you? How'd you get here? Why are you in real estate? What's going on, man?
Yeah, Ed, good to see you, brother. It's an honor to be on. We've known each other for quite some time, and I'm glad that you're picking back up on the content creation and adding value to the audience.
Thank you for coming on, man. The pleasure's mine.
A little background on me, David Choi. Without going too far back, went to Rutgers with for finance, concentration real estate, did real estate. I got the real estate bug really early on. I gravitated towards the idea of financial freedom and what real estate could do for me and my family. So the why was always like, being a first generation, saw my parents working their tail off, like 70, 80, 90 hours a week, go to work in the morning, come back, pick us up from school, feed us, go back to work. Wouldn't have dinner. It was just a grind just to put food on the table for me and my brother. And so early on, I realized that like I needed to retire my parents. The onus was on me, and I didn't want the same life for my future family. I wanted to be actively involved like you are, Ed, right? Being able to spend time with your kids, your wife, take them to school, watch their recitals, games. These are all things that I wanted in my life. And I knew that if I was stuck in corporate America or at a job that I was stuck to a desk, I just wouldn't be able to have the life I always dreamed of. And so started Googling how to retire at like 19, came across Bigger Pockets podcast, and it was over after that. I just saw regular Joes, plumbers, teachers, firefighters, cops, regular guys obtaining financial freedom and amassing millions through real estate investing, and said, you know what, I could do this myself. Went on the journey like all of us do, go to networking events, local RIAs, met with people that are just trying to accomplish the same goal, some behind you, some ahead of you, and did that for about 4 years while doing corporate real estate investments, acquisitions for some private equity funds. Happened to meet my ex-girlfriend at the time at an airport bar when we were looking at some deals in Florida. I flew out, and on my way back, met her. She just so happened to be on the same flight back, hit it off, and she had the same goals, and she quit like her corporate job and like within like a month or two. And I was like, holy crap, this girl's got a set on her.
Too bad that didn't work out, man. That's like shit movies are made of. We met on the plane on the ride home, everybody's like, you ever flown Virgin America? They used to be able to text people through Virgin America. It's like other seats. And I was always thought like, how cool would it be if you like text, you like, that's how you found your girlfriend, you like accidentally you start chatting. But that was, you sat next to her, it sounds like, or something, right? You're on the same flight. It's kind of fun.
Yeah, we started off with some tequila, and ended up just we were laughing so hard that she asked the flight attendant if I could sit next to her. We sat next to her the whole flight. It was really cool. We're still friends to this day.
Awesome.
But
Good.
She gave me the courage that I needed to jump ship. And yeah, it's been 4 years since I started my career as an entrepreneur, as a real estate investor. And since then, been able to build 4 companies. One's a wholesaling company that we're doing like 8 to 10 deals a month right now.
Awesome, man.
Hard money lending company. Started officially about like a year and a half ago. We originated 100 million in loan volume.
Ooh, the first big numbers, baby. Nice.
It's not that big. We got a long way to go.
First year, right? First year.
I just think that my partner's always been in the debt space. So it was really like it became official, and then we already had legs to stand behind. So it was a lot quicker than just like truly starting up.
Right. Right. You funnel the wholesale deals right into it. Help a good start.
Right. And then, yeah, it's kind of like economies of scale, right? You get enough sellers to say no to you on a certain price point, but you could sell their property and they're motivated. You got the listing. So we started we partnered up with Brendan Silva out of Newark, and we funnel him leads and helped him take him from like making $300,000 a year to about 2 million really, really quickly. And so, yeah. And, with all the liquidity for the portfolio of companies, we just dump it into commercial real estate. So we're buying apartments, same platform. We direct to seller, and we typically get full cash out refis. But at this point in time, as the market starts to tighten up, it's pulling a lot of the weaker buyers out of the market. Competition is slowing down. So it's a great time over the next like 6 to 12 months, in my opinion, to take advantage of the pricing adjustments that are going to occur. and buy some solid assets at great discounts for cash flow. And so there's a huge focus on raising capital and operating these assets optimally.
That's awesome. And we're gonna get into, I want to hear your thoughts on the current condition, kind of what you're going to be doing. I want to touch back on a little bit more about David here, man. This is awesome. I love that you remind me of yourself when you talk about regular guys, right? It's not, everybody looks at this business, I think, at times, and they think that it's more than it is, right? And I really do believe that some of the most successful people are like that, call it least educated, right? Because they just jump. I mean, all you really got to do is get into it. So I think that that's pretty cool that you mentioned that, and that's kind of what made you think about it. And I mean, that's what you were, right? You were wholesaling. Isn't that what your start was? I mean, you were just pounding the pavement, right? And going out. I mean, people might not know, but we have history. We know each other. I know you were the guy, and one of your favorite things was selling, actually going out to the house and locking the deal up. So tell me about that. Tell me about when you were doing that, because it's kind of a little bit of your beginning, kind of where you were always, I imagine, an outgoing guy, right? I mean, listen, your personality, you're a big personality kind of guy. So, but you're obviously a good salesman. So let's talk about that.
Sure. My whole life, I've been I graduated 10th from the bottom of my class in high school, pretty much skated through middle school, elementary school, parent teacher conferences. If your kid doesn't do these assignments and make it up, he's going to get left back. And trust me, we don't want him back. So please, for the love of God,
bring him
do these
forward.
Assignments.
Get rid of him.
Yeah, please, move him out of the ladder here. So always outgoing. I've always been the captain of my wrestling team, football team. So it's always been pretty natural to me. It's just, I'm an extrovert to the T. As I get a little older now, I kind of want more alone time, but still at my core, it was always there. But yeah, in the beginning, it was a grind, and everyone tells you don't worry about the money. Don't worry about how you're going to renovate or find a deal. If you can find a deal, the money will come. The partners to operate them will come. So long as you have you've done your networking. But the first step in the real estate journey is finding deals. And so that's what I did. I mean, in corporate America, every Saturday I would go out and go door knocking with this mentor of mine who I would split deals with. And I would just knock on people's properties that were going to get auctioned off at sheriff's sale and be like, hey, how you doing? My name is David. It's a pleasure to meet you. I'm sure you're aware of what's going on. You seem like a really smart person, but and I'm not here to impose my will on you. I just really want to let you know that you don't have to lose your property at auction. You don't have to lose it. There's a way to either salvage your credit, and even make money, right? And so I just want to help you explore your options. And it was just that reoccurring conversation over and over again, genuine, empathetic approach. You don't always have to make money on every deal. You just have to care enough. And I think that genuinity really came off to sellers, and I was able to lock up just door knocking and cold calling myself for the first year. I was able to lock up 25 deals. So
25 deals in your first full year doing this. You did 25 deals.
Signed, not closed, because I didn't know how to close these deals. But
okay.
But yeah, no, almost went broke, man. I had saved up a cash pile I thought was sufficient. It's like 75 grand. Got down to $2 grand within 9 months, because I was spending money on marketing and all that stuff. And then we closed one deal, made 60 G's, and it was I got a pipeline now. I got some capital to play with. Just kept reinvesting, and didn't pay myself for about 3 years. And eventually, it just kind of all started to come together.
See, man, I respect wholesalers that are successful almost more than anybody else in this business, because you really, for a long time, are just pounding pavement and getting kicked in the face. It is so rare that you hear a wholesaler that's oh yeah, I just got going in a month, right? People pay, it's just the constant calling, the constant banging with nothing. And then, like you said, maybe you get one deal, cool, you make 5, 10, 20 on it, but it's right back into that marketing, and you haven't gotten anything for 2-3 months. So cool, yeah, 20 grand's a lot of money, but you're also bro, I haven't made money in 3 months. I'm eating ramen noodles over here. I'm paying for my marketing expenses.
Yep.
It's not a lot of money now, right? So I just really have a massive appreciation for people like yourself who have just, started off wholesaling, right? I think it is so much easier to go, and it's still hard to do this stuff, right? But like, go be a realtor, go be a hard money lender or something like that, make a few bucks, save a few bucks, then you can kind of wholesale maybe, right? Like, oh, I got a little bit of my back and slowly get into that versus going right into wholesaling. It's like, just a lot of respect, man.
I
Really,
appreciate that.
I like that. And it's kind of funny because you've mentioned this a few times here, and I think about you, it's the genuine help, right? So you talk about a little bit of your success in the beginning with wholesaling was you were just trying to help people. You were being genuine. And I'll do a nice plug here real quick is you have your own podcast, right?
Thank you. Yeah.
I want to hear more about it here in a sec, but your podcast comes out of like, you want to help people, right? I mean, you're putting that whole podcast to me is you're helping people, right? You're bringing successful people on in the business and educating people in even basic financial literacy, right? Like your first episode was about, you got to get out of debt. You got to get out of debt, not student debt though, right? Keep that student debt and, buy a property, right? And start paying down debt with the property. So real quick, man, tell us about your podcast.
Yeah. I think the podcast is, it's largely giving, but there's huge ROI. So I don't want to come off like, oh, I'm just this huge philanthropist. There's definitely some selfish desires that come from branding. So I've now had the opportunity to interview some really, really heavy hitters, and the ones that grew at rapid rates. I mean, a gentleman I had on my podcast, Whitney Sewell, from the real estate syndication show. 4 years, he amassed $370 million worth of apartment buildings, right? And he has a daily podcast. He started with a daily podcast. And just think about doing a daily podcast with someone way more sophisticated than you. You're getting 1 hour of free coaching daily, but then every time you release a video or a reel or TikTok or a LinkedIn or Facebook post and you tag them in it, you're now extracting their entire network and also providing your network, right? Yeah. Now all of a sudden you become a thought leader and your brand becomes way more powerful. So tapping into your network to raise money into others just becomes significantly easier. And now more than ever, I believe that he who has the gold truly rules. Liquidity was flowing through the market. It's still flowing through the market, but are starting to tighten up. And so those that have access to capital are going to do very, very well over the next few years. And so, yeah, it's definitely doing my best to provide as much value as I can. But there's definitely some selfish monetary returns that come with the pod.
I'm glad you're saying that though, because that's kind of the truth about a lot of things, right? I mean, I think you do become more successful though when you are helping people, right? So there is a selfish aspect to it, right? You know that, and that's part of the reason why you're doing it, right? Like I believe, as you know, I mostly do hard money, right? So when I'm speaking to people, and especially newer borrowers, I'm genuinely trying to help them. Number one, because if I help them, I might actually get this deal, we'll make some money. But number two, you might actually finally see some success, right? So if I help you get to see some success, I'll see some success. We'll both become successful. Right. Look, you might not do your deals with me forever, but maybe we do our first 2 or 3 deals. You bring me a few more guys. I can tell a few more people I'm doing a few more deals. Helps me, helps you, right? What is it? Rising tide raises all boats, right? So yes, there's a selfish aspect, but I think though it also comes down to who you are, right? I mean, you're still helping people, right? There are plenty of successful people who are not helping people and could care less about people, right? So I do believe that it runs hand in hand. So thank you for admitting that, but yet you really are out there helping people. And I think that that's great. And that's super important, right? The car ride to work or whatever it is, they can listen to you, they can learn something. You're getting a little benefit. Maybe they join a course of yours or they invest some money into maybe an apartment building you're buying, whatever it is. But then at the end of the day, by helping them is helping you. So I personally don't see anything wrong with that sort of thing. But what you didn't do is you didn't drop a hard enough plug there. What's the name of your podcast? Where can we find you?
Yeah, you could just, it's davidchoi.biz. That's personal website. You could follow it and it'll take you to the podcast. It's also on every major platform. It's on YouTube now, Spotify, Apple. It's called the Real Leverage Podcast.
Awesome. Great. So we'll drop a link in this video as well for other people to check that out, man. So Dave, what do you think about the current market conditions, man? Where are we at? What are your thoughts? You're kind of talking about that liquidity, things are changing, softening up here, right? From a standpoint of, well, deals are harder to come by and stuff like that, but there'll be better deals, right? Maybe. So what are your thoughts, man?
Yeah. I mean, it's June 17th, 2022 right now. We just had a 75 basis point expansion on the Fed rate. Mortgage rates are adjusting. Inflation's going up. The stock market's taken a huge hit. GDP has shrunk. We may very much be in a recession, right? At this point in time, not a textbook recession. We'll find out at the end of this quarter. But it's things are tightening. I do some consulting for some realtors just for fun. It's just an easy business to consult on. I enjoy it. It's I'm finding that properties are sitting longer. Price drops are happening on the lending side, on the retail side, at least. Buyers just no longer qualify for properties that they did just a little while ago. On the apartments, commercial side, nationwide, there's free trades going on. Just no longer qualify for the mortgage at that price point anymore. So yeah, we're definitely seeing softening overall, right? I think that softening will continue to occur, but just given the fact that we're in such a high inflationary environment, real estate's a great asset class to invest in regardless of the fact. Rent growth is going to continue to increase, right? There is a housing shortage, not only nationwide, worldwide. So rent growth will continue to happen. I believe that areas that are going to fare very well and be stagnant or continue to grow are areas that have limited government overreach, where government's not restricting rent growth with rent control, areas that didn't shut down entirely when the eviction moratoriums were going on. I think areas with strong population growth and job growth are going to continue to do well, because so long as you can increase NOI, right, the bottom line income of the asset, if you look at it as a business, you're going to be able to counteract cap rate expansion. And so it's a good time to be in good markets right now. I feel bad for guys like me and some of the players that are in blue states, but focused on right now. We've taken down a couple of deals in these more high growth, less government overreach markets, and that's kind of the play for us right now. It's buying properties that cash flow, strong rent growth potential, going into long-term debt in markets that we truly believe have headwinds ahead of them.
So curious about that, because there's a big piece you talked about was the where to be and the states kind of, right? So I'm curious where you are, and then also at the same time, I almost wonder the opposite. So I'm interested in your point of view, is because everybody has run to a Florida, for example. So Florida maybe has seen the highest price increase. So when things cool off, they could theoretically see the larger price decrease. And I agree with you. There's not much supply. Quite frankly, personally, I don't think prices, overall are really going to go down all that much. Certainly there's some markets are going to behave differently than others. But so let's take a Florida, for example, who is red hot, gone up so much, great for landlords. But if they cool off, I mean, that could hurt people who have bought and continue to drive prices down, right? You might love that because you just keep buying them, right? That's fantastic. But they get hit kind of hard. And I look at something like Jersey, because I'm a local guy. I'm trying to buy local. Honestly, I don't really right now in my life, at least maybe in the next 5 years, don't see an interest in buying something so far away. I'd love to invest in something with somebody where I'm more hands off, right? If I put some money in and get a return, whatever. But I kind of like the New Jersey area as much as, the laws are a little bit stronger here. They're certainly not New York, right? Which is great, but I think it'll take less of a hit, right? Because we we are in a very populated area. We are outside New York City. We did actually take probably more of a hit than Florida did during COVID, because everybody moved to Florida. So our prices probably didn't go up as much as an area like Florida. So what do you think about something like that, right? Let's not run from New Jersey, where rents are harder to, tenants. The tenant landlord's not as friendly for the landlord, versus a Florida where did that already run high?
Yeah, no, I think you have a good point. Try to look at like economic and historical trends. If you take a look at COVID, New Jersey during COVID, right? When liquidity crunched, New Jersey, there was almost virtually no transactions going on, right? With the exception of some of the like agency debt products out there. The shadow market, the non-QM hard money and non-QM rental products, they were few and far between. It was really difficult to get a loan. Whereas areas with like Atlanta, Texas, Tampa, those markets during COVID, even at the heights of the shutdowns, those areas continued to grow because of strong population job growth and because of the institutional capital of iBuyers, these SFR REITs and private equity funds that are acquiring, right? So there's just way more demand in those markets. And yes, New Jersey is an infill market. There's not much more. There's not really that much. There's no land for you to develop on.
Right.
So there's restricted supply here. We do have close proximity to New York City, et cetera, et cetera. But when you look at the cost of living, right, versus the median income, and when you look at New Jersey, it's incredibly difficult to live here. They're higher, price points are higher, rents are higher per square foot. And when you look at a comparable property in Tampa, I mean, or any like almost in these high growth states right now, you're still finding that price points are lower. Rent is lower, but income is relatively the same, right? And so, especially during downturns, historically speaking, foreclosures are much higher in these higher cost of living states, right? And so, yeah, no, I'm betting my money on areas like Texas and Florida, and the Arizonas of the world, Utah, it's just unbelievable. But in those markets, there's fierce competition, and yeah, there's losers and draws. I think you can make money in any economic environment in any area. You just have to buy right.
True. Yep, absolutely true.
It's not to say I'm pulling out of New Jersey, right? I still have a heavy operation down here. I'm still going to acquire down here, but I think it's a great time to explore and acquire in different areas right now.
Yeah, no, and I don't disagree. I just asked you for that, but I don't mean to put you on the spot, that interest, because I mean, everybody goes back to like 08, 09, oh my God, Florida, Texas, they blew up. Like, to me, this is not them, right? That was a completely different scenario back then, when these mortgages that just were taken down were still qualified buyers, right?
Yeah.
They, so the mortgage, that retail side, as you were saying, they're better loans. So the product is more secured now. So it isn't what it was before. And the supply is an issue right now. So it's not like 08, 09, people were losing their home. There was a dump of supply going in. The market was just going down so fast that people couldn't keep up. And, it was also partly inflicted on these adjustable rates that hit for people who couldn't afford them at all. So they were going with it. Like, we're just not in that market right now. And I don't know anything, right? I just love to say, I love the people who say they know everything. You go on Instagram, every guy's like, oh, we're headed to, the next Great Depression is coming along. And it's like, it's funny because everybody points back to history, but what's going on right now is there is no history to look at, right? Pieces of it are, sure, we've had to raise rates before, there's been inflation but it's never been like this. Like, we are raising rates and cooling an economy that is still pretty hot. We have the lowest inflation we've ever had right now. So the lowest unemployment, that we've had in a long time. So it's just an absolutely different animal. I do think that, them raising rates is going to slow the market down. There'll be less buyers. It's more of a mortgage related thing. Obviously there's inflation, and, unfortunately I looked at this inflation article. There's an article about inflation this morning, and they were basically saying that, like, core inflation isn't really up as much as people think. What's up is real estate. Obviously, it's gone up a lot. Gas is up a lot. So these are the things like we want to talk about, because what I don't know, man, if milk goes from, $2 to $3, like, yeah, that's huge, but like that's not really impacting me. But gas going from 3 to 6, like that's impacting me. That's $50 more a week. My groceries aren't going up that much money. So I just think that it's interesting. It's something that has to be done. And like you said, if you're well prepared, and sounds like you're doing the right thing. And again, I don't know what the right thing is, but you sound smart, right? You sound like you know what you're doing. That I think we're going to be all right. It's just, we're not super over leveraged. And look, downtimes are great, right? That's how people get rich. I mean, really like rich, I think. It's like if you're able to survive a downtime, like hell, man, you're going to be all right. Just don't lose your shirt, right?
Yep.
But
The over leverage will suffer. And those that stuck to their investment principles will do just fine. It's an opportunity for the real guys to take a larger market share. It's an opportunity of a lifetime, I believe, for those that can persevere. I don't have a crystal ball, man, but I can tell you that all we can do is get more operationally efficient, cash up as much as we can. And if you have access to liquidity and capital, it's probably a good time to start tapping into your network to start taking down some juicy deals.
Yep, can't agree more. So I guess it kind of answers my other question is where do you go from here? What are your plans?
For us, it's sticking to what we're good at. We're good at sourcing, underwriting, closing on deals. The one thing that we probably need a little work on is raising capital. Partnering up with more sophisticated sponsors on deals is probably something that we're actively pursuing, is interviewing sponsors to provide capital and deal flow to right now. And so at this point in time, as we begin to shift gears into new markets and expand our reach, we're spending a lot of time interviewing sponsors, real estate operators that have local market expertise, have a track record of winning and losing in a couple different market cycles, and partnering up with them as we grow into new markets. So yeah, the key is good sponsor relationships and raising money.
Thanks, man. And then just keep those core businesses going, right? You've already kind of get them set up, and like you said, you get more operationally efficient. They're going to just take off on their own.
Yeah.
I also think, I don't know what your thoughts are. You would know better than me, probably being the wholesaler, is you're probably do all right with wholesaling if the market slows down, right? Because people are still going to want to do deals. Investors were saying, hey, if you have cash, deploy it, right? People are still going to want to get rid of their homes.
Yep.
So you're going to always have that opportunity to be able to do that.
Yeah, I think it's going to be it's going to flip. It used to be hard to get deals and sell them and easy to sell them. I think now it's going to be a little bit easier to get deals, a little bit harder to sell them.
Like
so
having that lending background and that capital, right? You could even take some of them down at that point.
Yeah, absolutely. Absolutely. You just need to be careful about your underwriting. A lot of people are still just, they don't have their financials down. They're not expecting, it's important to do a lot of sensitivity analysis now more than ever, right? What happens to your debt service coverage ratio when you're looking to get out of your bridge debt 3 to 5 years from now, a year from now, right? Are you going to be able to refinance at your projected number if interest rates are between 6 to 7%? I think the key right now is just a lot more due diligence, a lot more, just more careful underwriting, and playing out those potential scenarios and those return profiles. If in the event cap rate expansion occurs and interest rates go up, are you still going to hit your projected returns, right? And so we're making offers right now at lower than what we used to, and a lot of sellers haven't adjusted to the pricing yet. But I think that's going to start baking in a couple of months.
I agree. And I think, again, people who aren't buying right now, the rates will start to adjust as well for them. Because right now, 6.5 is a shock. Because I was getting 3.5, 6 months ago type of thing. So
Yeah.
it hurts right now, right? To say that hurts, but it'll normalize a little bit, right? It might take some time, but it'll normalize. And you still got to buy real estate, right? So, I mean, I kind of went through the same, exactly what you said. I didn't necessarily see this coming as quick as it did. I bought a property in January before rates even moved, right? And I was like, I'm going to refi this thing for like 3 or 4%. It's going to be great.
Yep.
And now I'm looking at like, damn, we can't get this project done quick enough because I'm going to be refinancing at 6 or 7%. So that cash flow that was, let's just call it $1,000, $1,200 a month, is starting to look like $200 or $300 a month. And I'm lucky in my situation just because I am fairly conservative. I'll probably keep it anyway. It's not that big of a deal. Like a pretty good cash flowing property. I believe in real estate long term. So I'm like, hey, look, throw a $200 a month guy in there with all the others. When you look at it individually, it hurts, but whatever, right? It's not a big deal. Property values are still going to go up over the long run. And my tenants are going to pay more rent in the long run. Inflation is a tax on the poor. So I'm going to raise my rents. I'm sorry to my tenants. Rent's going up. It is what it is, right? And call me in a couple of years and that'll be cash flowing a lot better. And I'll probably refi, right? At some point, I'll refi again. And, I don't even have to take cash out, but if I refi again and change my term, I'm going to cash flow a little bit better. So again, I'm lucky to be in that situation, like you said, but I think there are a lot of people out there that they weren't thinking and weren't prepared. Like I wasn't thinking, but prepared, right? I was able to do it. So it'll be interesting to see what happens to guys like that. And look, I don't wish bad on anybody. I hope that they're all right. Some of them are my borrowers, I want them to be able to get loans.
Yeah, exactly.
But awesome, man. Question for you real quick. Where'd the cheese come from, man? Tell me, and give me a good solid one, brother. It wouldn't be right if I didn't get that from you.
Oh man.
I know you probably got to be feeling it, but give me a good cheese.
Oh man.
I love it.
It's I think like one last thing. I know we're wrapping up here. Right now, more than ever, it's great. It's good. You need a good lender, right? You need to have creative lenders that could solve problems. If you can't take out non-QM debt anymore, but you could go to credit union route, that those still offer attractive rates. You might need to now start acquiring bridge debt with a longer loan term than 12 months, right? Because that seasoning period might be a little longer. But having a good lender, a good broker that has local expertise and local connections, really going to provide that's where the value and the creativity is gonna give you the ability to truly perform in this market. There's you could easily get washed in the woe is me mentality. Oh, I can't buy deals anymore. Interest rates don't work. Pricing hasn't adjusted. I don't know what to do. Or you could have a positive mental attitude and figure it out. One idea could solve a lot of your problems. So PMA, man, I think now more than ever, positive mental attitude is key.
I agree with that. I mean, it's always true, but yes, now more than ever. And it's going to get tougher, right? So continue to keep the head up and be positive. It's going to work out. I mean, look, recessions are needed in markets. There's always ups and there's always downs, right? Yep. And they're going to be there. Nothing you can do about it. But like you said, it's just be positive and everything's going to work out.
Yeah.
Awesome, man. Well, thanks for coming aboard. We appreciate it. If you want to give us your best way to reach out to you, appreciate it. And we'll mark it in the show notes and, tag you on here.
Yeah, sure. Again, davidchoi.biz, davidchoi.biz. You can find me on LinkedIn. It's the same handle. You can text me, call me if you need advice, help, you need capital, equity. Try to compete with my guy here. But you can shoot me a text message, 201-973-7029. Thank you, Ed. It's been an honor to be on your show, brother.
Dude, anytime. I appreciate it, man.